As of Monday, August 10, 2026 at 12:31 p.m. IST, market sessions in North America are currently closed. Ondas Inc., NASDAQ, ONDS, closed its most recent regular session at $9.11 per share, marking a modest shift of 37 cents or approximately 4.23% to the upside during normal trading hours, with an additional minor tick higher of 5 cents or 0.55% in late extended sessions. While retail trading desks on Robinhood, SoFi Invest, and Interactive Brokers see a routine tick upward, the real narrative lies under the hood of institutional capital deployment. Retail traders looking at basic chart patterns might assume this standard bounce is just normal market chatter, but the underlying tape tells a completely different story. Wall Street is quietly pricing in a major fundamental re-rating driven by a massive pivot toward autonomous military defense platforms, counter-unmanned aerial systems, and strategic allied defense contracts that standard screeners completely overlook. The broader market consensus has long categorized Ondas stock as a niche speculative small-cap play tied primarily to slow-moving Class 1 railroad wireless upgrades. Many retail participants utilizing self-investing approaches or general investment help channels often view the ticker as a high-risk microcap that burned cash while attempting to deploy software-defined radio networks for utilities and transportation giants. That established expectation is precisely why retail money has historically been hesitant, viewing the company as an eternal pipeline promise rather than a cash-generating reality. The reality on the ground turns that narrative inside out. Ondas has systematically transformed itself from a specialized radio technology maker into an aggressive, multi-domain autonomous defense powerhouse. Through strategic acquisitions including DYZNE Technologies, RoboTeam, and Centrix, alongside international military defense orders like their recently secured Australian defense contracts, the company has positioned itself at the absolute center of modern conflict technology. The consensus believes Ondas is a legacy industrial tech play waiting for railroad budget approvals, whereas institutional order flow suggests capital is accumulating a frontline defense autonomy contractor. Analyzing the recent price action, trading volumes on platforms like Fidelity Brokerage, Interactive Brokers Trading, and Robinhood Stock Trading reveal a distinct uptick in accumulation during recent sessions. Trading volume surpassed 72 million shares, significantly elevated above historical averages, signaling heavy institutional involvement rather than casual retail turnover. The stock has traded between a 52-week range of $3.20 and $15.28, reflecting extreme volatility as the market attempts to properly evaluate its aggressive defense expansion. Daily price swings have broadened, creating prime conditions for active traders using tools across SoFi Active Investing, Robinhood fractional shares, and individual brokerage accounts looking to capture high beta momentum. This recent volume surge directly correlates with heavy news flow surrounding counter-drone protection deployments, such as high-profile site protection agreements and collaboration with top-tier prime contractors like Lockheed Martin. When institutional funds trade on platforms like Interactive Brokers Account or Fidelity Wealth Management, they aren't looking at last year's earnings filings. They are analyzing forward revenue visibility stemming from government security and defense backlogs. The options market has similarly reflected the shift, with call options activity outpacing puts as institutional traders position for earnings catalysts. Comment below how many shares of Ondas stock you currently hold in your portfolio and whether you're buying this defense pivot or holding off for the next earnings report. To fully grasp why this tension between public expectation and fundamental reality exists, it is vital to understand the core operational engine driving Ondas Inc. Originally built around Ondas networks, the company engineered a patented standards-based software-defined radio technology known as FullMax. Designed to operate over wide areas, FullMax enables mission-critical Internet of Things applications for heavy industries like rail, electric utilities, and oil and gas. This side of the business provided a stable foundation, but scaling industrial deployment required long sales cycles, creating patience fatigue among traditional market investors using online investing sites. Recognizing this constraint, management pivoted aggressively by launching and expanding Ondas Autonomous Systems. This unit aggregates cutting-edge robotics and drone technologies, featuring the Optimus system, one of the first FAA-certified automated drone platforms, and the Iron Drone Raider, an autonomous Counter-UAS interceptor designed to physically neutralize unauthorized airborne threats. Combined with tactical unmanned ground vehicles from RoboTeam and cyber-over-radio frequency technology from Centrix, Ondas has constructed an end-to-end automated security ecosystem. Its revenue model mixes direct hardware sales with recurring robot-as-a-service software contracts, creating predictable, high-margin revenue streams over time. Looking ahead, the market setup for Ondas stock rests on a few critical catalysts and risks. On the opportunity side, global geopolitical tension has accelerated government defense spending on autonomous air defense and drone mitigation technology. As military doctrines globally prioritize low-cost autonomous systems, Ondas sits in a prime position to capture government contracts through its specialized defense platforms and strategic investments like Ondas Capital. Furthermore, any sudden regulatory push or accelerated rollout by Class 1 railroads for automated inspection tools provides an immediate secondary growth engine. However, investors managing portfolios across Fidelity IRAs, Schwab Intelligent Portfolios, or Intelligent Portfolio setups must balance this upside with key operational risks. Dilution remains a persistent focus for small-cap growth stocks in this space, as rapid acquisition strategies and scale-up costs frequently demand fresh capital injections. Additionally, integration risk surrounding newly acquired entities like DYZNE Technologies must be executed flawlessly to prevent margin compression. If management successfully converts its growing backlog into GAAP profitability, the current valuation gap between market expectation and fundamental reality could narrow rapidly. In summary, standard market perception has long treated Ondas as a slow-burning industrial communications play, but real-time trading metrics and strategic moves show a company evolving into an agile autonomous defense contractor. While mainstream retail sentiment lags behind, institutional capital appears to be re-evaluating the stock's multi-domain autonomy exposure. Whether utilizing SoFi robo-advisor platforms, self-investing tools, or trading platforms on Fidelity, monitoring this gap between backward-looking expectations and forward-looking defense execution remains the single most critical factor for tracking Ondas stock in the coming quarters.